Welcome, welcome, welcome. Let's shed some more light on this here. Welcome to the show. Welcome to another finance video here at Land Cruiser Midwest. Today we're going to talk about earnings reports. Next week we got a slew of earning reports coming out, and I'll just drop some names. Netflix, JP Morgan, a lot of finance companies, Wells Fargo's, Abbott, Morgan Stanley, American Express, Goldman Sachs, Taiwan Semiconductor. We just got there's probably like 25 here. Prologix, PepsiCo, BlackRock, Charles Schwab, Citigroup, Marsh & McLennan, just a slew of companies out there that going to be issuing some earnings report. And if you've been watching the channel, you know that earnings report can either make you rich if you already own the stock, or can be a death kiss and make it go down. And here on the channel, what we try to do is watch stocks, and when they take a 5, 10, 15% dip, and they're a quality blue chip stock like a lot of these, when they take a hit for no reason sometimes, such as maybe they missed a number just a little bit, maybe they didn't provide guidance for the full year, which that's been happening lately because of the tariffs. Wall Street dings them and their stock goes down. Those are the ones we like to buy. Invest in those, especially if there's no reason behind it. If they made their numbers and maybe Wall Street thought they weren't good enough, and it goes down 15%, that's a buying opportunity to me, because it's just overreaction on someone's part. And if it's a good stock, I'm going to buy into it for a couple of weeks, a month, maybe 6 weeks at the max, and make 10, 15%. I'm there all the time. And as I look at some of these companies, one of the companies I really like, but it's kind of overpriced, and I've been watching it for at least 4 or 5 months, is American Express. That's a good stock. They really manage who they give money out to, unlike some of these other banks that that have some bad stuff on their books, or stuff that they're not telling people about. Yeah, the extend and pretend type of scenario that a lot of these banks are pursuing today. American Express is not one of those. So if American Express goes down, I'm a buyer. So look at that one next week. And let's talk about earnings reports. I worked in finance for many years in Fortune 500 companies. There's no reason for a company to miss an earnings report. They know the numbers they need to make. A lot of these large companies have so many levers that they can pull, right? You either increase revenue or decrease expenses, or you do both when you're having a problem. These companies have such sophisticated general ledger systems that they run a profit and loss or earnings report on a daily basis, if not more. So they know where they're at compared to last year or the next year or the next year, or even to their compared to their plan. They know. These managers, these accountants, they know where they're at and whether or not they're going to make that number and by how much. So it's not magic. It's science. It's definitely science. It's definitely reality. So any company that missed the earnings report, that's a dead giveaway, because if you miss an earnings report, that means your management was asleep at the wheel, or there was just nothing that they could do. So, like I said, having worked for a Fortune 100 company for many years, I saw it in action, where some years where they needed to come up with some extra, or get rid of some expenses. Those Christmas parties, holiday parties, summer events for the employees, they kind of disappeared or surprisingly got cut back drastically by like 75% so the money could flow somewhere else. Um, the other thing that companies like to do is like if they're going to really beat earnings, they're doing a gangbuster job and they're beating earnings. Sometimes they'll pull forward expenses. They'll purchase some things that normally they would buy in the next quarter or the next year. I've seen that happen quite a bit. It's all legal stuff, but in an essence, they're kind of cooking the books, right? They know they got a number that they're shooting for. They're doing everything in their wild world to meet it. I worked in the insurance industry for a while, and one of their tricks is to, when they have extra revenue, is to put more money towards reserves, which is if there should be a catastrophe, they need to put a reserve to that so they have the cash to pay it out. Well, sometimes when they have oodles and oodles of revenue, they'll put more money than they should towards revenues as a way of kind of hiding it, okay? They hide it that way. Another thing that they do is, if they're not going to make their number, they'll take their investment portfolio and they'll sell some of that stuff, which generates revenue and adds to their bottom line. So, but that's a giveaway to the analysts. The analysts can see right through that. But that's kind of a last-ditch effort that they go out there and sell some of their stock portfolio that they have and take some revenue off of that. So there's many levers that they can pull and they can manipulate. Yeah, did I say that? Manipulate to hit those earning numbers. So you're going to see that happening real time this week. Looks like every day we got earnings coming out. And not only will it affect these companies, but anyone in their industry, it could impact their numbers too. Because like if you're in a banking industry and all the banks are coming back with bad reports, chances are some of the other banks are going to take a hit too on their stock price. So as I tell you guys, you should have a watch list on whatever software you're using to monitor your stocks and ETFs and what have you on a daily basis. Have a lot of these companies in there and just watch them over a couple of months and you'll get a feel for what causes a stock to go up and what causes a stock to go down. It's amazing how you can get a sense for a stock just by watching it for a month or 6 weeks. There's cycles that sometimes these stocks go through, and you just can kind of sense it. Like this week with Robinhood, I began watching Robinhood this week. They were at 94, went up to like 98, went back down to 91, and now it's back up to 98. So it's generating through a cycle there. It really wasn't that hard to figure out, and made some money off it. We made 5%, almost 6% off our Robinhood this week, and we only owned it for 4 to 5 days. So there you go. So like I said, there's there's a website called wallstreet.numbers. wallstreetnumbers.com. Wall Street, one word, wallstreetnumbers.com. You can go out there and you can list all the stocks that are going to be doing earnings this week and the date. There's oodles of them, so get your watch list out there and start looking for the earnings. Usually at the close of business, they do earnings. Sometimes they do them before market open, but normally close of business day. And like I said, I use yahoo.finance to monitor most of my stocks. It seems to be a pretty good platform. So there you go. Get ready for Monday. Get ready to make some money. Like, share, subscribe. We're a small, up-and-coming channel here on YouTube. Very diverse. We do car shows. We do podcasts. We do political commentary. We do a little bit of everything. And now we're getting into the finance. So like, share, subscribe. Thank you.